Imagine this. You're in the middle of a trade, watching the market climb, and just when you think you're about to hit a jackpot, the price reverses. Again. Frustrating, right? Well, what if I told you the market was actually leaving you clues all along?
Today, we're going to dive deep into how to master the secrets of support and resistance. The real secrets that no one talks about. You'll learn basics of support and resistance, defining support and resistance in two different concepts. How to identify the strongest support and resistance levels. It's not just about drawing lines. Not all support and resistance levels are created equal. How to draw accurate support and resistance in levels. They aren't just lines, they're zones. Why are they so important? Why these levels are so powerful and how they dictate market behavior. When to buy or sell when the price approaches these levels. Timing is everything.
These are key points that today we are going to cover in this video. By the end of this, I am sure that you'll see the market in a whole new light. No more guessing, no more frustration, just clarity and confidence. Ready to crack the code? Let's dive in. Basics of support and resistance. So first, what is support and resistance? Let's start by defining what support and resistance are. Support and resistance in demand and supply concept. In supply and demand concept, support and resistance aren't just lines. They're zones where institutional orders stack up. In the world of trading, support and resistance are like invisible floors and ceilings for price. But what creates these levels? It all comes down to supply and demand. Support is where demand steps in. Think of it as a price level where buyers are so strong that they prevent the price from falling further. It's like a safety net. Price bounces back up. Resistance, on the other hand, is where supply takes over or where supply overpowers demand. Sellers are so dominant here that they stop the price from rising further. It's like hitting a ceiling, which means support is the level where demand is strong enough to stop prices from falling, and resistance is where supply is strong enough to stop prices from rising. These zones aren't just random. They represent areas where smart money has placed significant orders. And these levels form because of imbalances. When there's more demand than supply, price rises. And when there's more supply than demand, price falls. Simple, right?
All right, now let's level up support and resistance with AOI, or areas of interest. Have you ever wondered why do traders keep marking the same price levels over and over? Because smart traders don't chase price, they wait at areas of interest. Now wait, what is areas of interest and AOI? Areas of interest is all about key price levels. It may be previous highs, lows, psychological levels, and moving averages. So in this concept, support is a price level where buying interest keeps the price from falling further. Support is an AOI where price has historically bounced. Resistance is the opposite. It's a price level where selling interest prevents the price from rising above that point. Resistance is an AOI where price has struggled to break through. The key here is to look for clusters of activity, like where multiple highs or lows converge. These zones give you a higher probability of price reacting, because they represent areas where big players are likely to make moves. So what support looks like is once price is declining into a level of support, buyers come into the market, push price to the upside. And then resistance is when price is heading to the upside, it hits a resistance level, then sellers come into the market and then take price to the downside. It is literally as simple as that. Which of these concepts makes the most sense to you? Drop a comment below and don't forget to like and subscribe for more trading insights. So now that we understand what is a support level and what is a resistance level in two different concepts, how can we identify these levels? Not all support and resistance levels are created equal, right? Identifying and finding strong support and resistance levels is not easy, right? This is why I am going to show you the exact steps to identify these game-changing levels or zones. The first step to identifying strong support and resistance levels is to look for price reactions. These are areas where price has reversed or stalled multiple times. Strong support and resistance levels are levels the price reacts multiple times to a level. Now, when we get into the charts, so what is strong support levels? Strong support levels is an area that has more than 3 touches. Look for areas where price has bounced up multiple times. The more times price reacts to a level, the stronger it becomes. So, strong support level is once price has more than 3 taps of price being held above that support level, as you can see in this example right here. So, what is a strong resistance level? Literally the same thing. Look for areas where price has reversed down multiple times. Again, the more reactions, the stronger the level. These levels as price magnets. They attract price action because traders remember these zones and place their orders there. Next, always check higher time frames, like the daily or weekly charts. Levels on higher time frames are more significant because they represent areas where big players are active. What it does mean: a support or resistance level on the daily chart is far stronger than one on the 1-hour chart. These levels often act as major turning points for price. Always remember this: if you're trading on a lower time frame, always align your levels with the higher time frame structure. This gives you a bigger picture view and increases your odds of success.